So good morning, everyone. You're all very welcome to our next trader call interview. Here we have Simon, who's one of our funded traders out of the UK. So obviously in this call, we're going to be chatting to Simon about his trading career, a bit about his background. What does he look for in the markets in terms of his bias, in terms of his viewpoints? And of course, just more about his strategy and his style of trading and what he deemed to be, or what he looks for in terms of trading opportunities as well. So obviously, for those of you unaware, Alpha Capital Group, we do offer funded accounts to traders. We do have a two-step process: challenge, verification, and then of course you are then funded in the live financial markets with us as well. So we do fortnightly payouts. And of course, we do these touch base with these traders after they've passed all the challenges, to see how they've gotten on with their obviously career so far with us at the Alpha Capital Group. So Simon, I suppose first of all, do you want to maybe talk me through a bit about yourself, a bit about your background? Obviously a good place to start with.
Yeah, absolutely. Well, I started trading around, I think, 2014. Just trading on, my own capital really, and I traded with IG Index. Then there was capital. There's some capital. I can't remember exactly the name for the company. The company. Then I did IC Market, then Blueberry as well. I traded with plus 500 as well, yeah. But just my own money. Then last year to 2021 is when I took trading a little bit more serious, because I'm a teaching a person by profession. I'm a science teacher in chemistry and maths mainly. So teaching up to GCSE, but then I resigned from my job for some reason. I just thought I've got to take this because I saw the opportunity in it. So I thought I've got to actually give it a go. So I took a really bold decision to leave my job. I was teaching in London. So I started trading full-time, really. I was trading with FTMO during that time. So I've got an account with FTMO. Then I went to Educated Trade, where I met you, Jerry. So, when we were talking through, he taught me quite a lot of things. So I, gaining more confidence in the market. And then I had to, he told me about the Alpha Capital Group, which I tried. I didn't do well because of, I used to trade martingale. So I didn't do quite well my first account with Alpha Capital, unfortunately, but that was a learning goal. Then Alpha Capital introduced the, which was really good for me actually, they introduced the competitions, monthly competitions. So I took the monthly competition mainly to learn the platform and also to learn my trading strategies. I was not successful in the monthly competition, but my wife was one time. But I learned quite a lot, and also again, that's when I had to discard of the martingale strategy, which was kind of like trapping me in the. I was falling, failing on the martingale strategy. So now I'm quite aware of it. That I'm not going to add like. Bigger position when you have got a losing position already. So yeah, so now I'm trading with you full time, which is great.
Brilliant. Okay, brilliant. Okay, fantastic. It's great to know the background and I suppose the story, because obviously I do know we were obviously communicating before you kind of got into the prop trading world here with Alpha Capital, but even the story about you being a teacher and giving up on your profession and the very bold move that obviously ensues as well. So it's obviously great knowing that story, because I suppose for many it's interesting, because a lot of them will give up the day job and then obviously fail. So it's great to see the progression with you in terms of making that really difficult decision and then of course succeeding in the background. So I believe you've been paid today, Simon, is that correct? Yeah.
Yes, absolutely. Paid today. I would say it's 2 weeks salary.
Okay.
which is more than double my monthly salary as a teacher. So that's incredible. In 2 weeks, I kind of like doubled, my monthly salary as a teacher. So that's fantastic.
Yeah, brilliant, incredible, incredible. And it's great to obviously hear these stories. So I suppose from a trading perspective now, because I know you obviously mentioned you were trading with the martingale strategy and you kind of ditched that to refine your structure in terms of your approach to the market. So do you want to maybe talk me through a bit about your strategy now in terms of what you're using? Are you using indicators? Are you using technical analysis? Are you incorporating fundamentals? Do you want to maybe talk us through a bit about that?
Well, I think because of my experience now, I use a lot of things. So technical analysis, which you taught me. So I use as well fundamental analysis, the macro. But yeah, the macro I use, there's a company called Get Me Trading. The company is in London, actually. It's called Get Me Trading. So they use the idea of, I think I will show you in a minute, because they use idea of they call them scorecards, which tell you the macro, the internals of the market, the market is going to do. And based on that, then you know whether there's going to be risk in the market or whether there's going to be risk on. And also, again, you make your decision again on the technical based on those macros.
Okay, brilliant. Okay, so you would very much be incorporating the macros with the price action, analyzing the markets from, I suppose, an outside perspective, and then trying to find opportunities of value in terms of trading opportunities. I presume that's what you're... Okay, brilliant. Okay. So I suppose then, do you trade higher time frames, or with that strategy, are you trading higher time frames and less opportunities, more refined entries, or are you still day trading per se with your style?
I kind of like incorporate both. There are some trades, there are some positions, some trades which I would have taken like for longer term. Like if there is risk coming up, like those macros, they kind of like tell me in the 2 month forward basis, like 2 month forward looking, whether something, whether an instrument or a market is going to appreciate or depreciate.
Okay.
So based on that, I go to lower time frame to actually refine my entry, and also I use the idea of order blocks.
Okay, very, very interesting. Okay, so you're building as many confidence as possible. Okay, brilliant. Okay, fantastic. Okay, so the incorporation of the fundamentals, the macros with the technicals is obviously a hugely important thing. So I suppose that would then turn to risk management. So I suppose with any prop trading firm, they've got specific limits of drawdown, 5% daily, 10% or 8% in terms of upside targets. So how do you obviously incorporate risk management into your strategy? So how do you determine your position sizing? Is it relevant to your open capital, let's say your equity at stake, or do you look at it on a singular basis?
Yeah, I base it on the capital that I have. Sometimes I do long short. Say because I look at the dollar as well, the dollar index. If the dollar index is in the correction like what it has been these days, so I would be doing something like the strategy called long short, where I long, say I long Aussie dollar, for example.
Okay.
But I would have looked on those macro whether the Aussie dollar is appreciating or weakening.
Okay.
In about 20 days to come, what is generally happening with it? Like currently, the Canadian dollar is very weak. Is pretty much like the weakest on that scorecard. So because of that, I can take a position where I am shorting the Canadian dollar.
Okay.
But then I look at another market. If the dollar is not really, the US dollar is not doing really anything, then I look at another market where I will be longing that sometimes. So it depends on situations, really.
Okay, so it's kind of like a hedging mechanism then, I suppose. Would that be right to say? Okay, brilliant. Okay, really. Again, it's great because obviously looking at these interviews and speaking with these different traders, everyone has a very, very unique style, a unique way of looking at the markets, observing the markets, and then of course executing trades off the back of that. So hearing the long, short, the hedging, I haven't actually come across too many traders who do the hedging now, which is obviously hugely interesting. So so then you obviously went to do the competitions. So you obviously found the competitions to be the best way to backtest your strategy. Is that correct then?
Yeah.
Okay, brilliant. And you've been, so how long have you been trading? Actually, how many months now have you been trading this current strategy then, Simon? Is it a couple of months or is it something longer than that?
You mean the long short one? That's about 2 months now.
Okay.
But that's only one aspect I use. I think because of the experience I have, I use quite a few strategies. So that will be, the long short one where I'm hedging. It will be only when the dollar is in the correction, like it has been for about 3-4 weeks. It has been in the correction. So usually during that time, the market will be more like ranging. So when the market is ranging, I do like long short. But then when the market is trending, like the dollar, I expect the dollar to start trending when it breaks above. At the moment, I'm looking at it, it's almost like when they trying to form a double bottom. If it breaks above and start trending up, that's when I'll be taking the position only outrightly on their technical analysis themselves. Okay,
got you. Interesting. I find this really fascinating, really interesting, because it's obviously great to hear how traders approach the markets. Okay, so then if we're chatting about the risk element then, and obviously looking at the different parameters and obviously the back testing, how or what's kind of your risk in place? So you're obviously looking at maybe potential positions simultaneously. So as you said there, the long and the short simultaneously. So how do you define your risk? How is there a certain way or a mechanism that you can say, well, I'm risking 1% or 2%, I'm hedging different instruments? How do you calculate or how do you define your risk?
If I'm using the hedging one, I will be risking the actual, so in this case, I'll be looking at the actual capital, not per trade. So per capital, like for example, if my account goes down by 2%, for example, then I say, no, I'm gonna stop and I'm not trading, because in that case, it's really a bit difficult to control, because you'll be looking at one which is gonna profit more than the other. Then once so you're looking at, if they all go against me for any reason, if they all go against me, then if my account, I'll be looking at my balance, also my equity. If my equity goes down by 2%, then I'm out. Okay.
So you have well-defined risk management protocols. You're obviously not, the idea of it potentially going to hit your maximum daily loss of 5%, that never comes into question with you then, obviously, with the way you're trading then.
Well, it used to be, but now at the moment, I don't think the 5% will be way away of the way. I learned over the time, when I was doing those the monthly competitions that you're running. But because other people would kind of like make really a lot of money, and I was more like a tortoise in the sprinting race or something like that. So I thought I use this as a learning tool, because there's not very much way I can compete with the people who are usually at the top. So I'm using that because it's more like a real market rather than a demo account. It's more on the idea that you're trying to make money, so it brings you in the actual market. The monthly competitions.
I find this, it's fascinating. I love this. I really do. And I suppose as well, when you sit there with the tortoise, it's really hard. You can't really compare yourself to anyone else, because they could be looking at a completely different style of strategy. They could be looking at different conferences. Their risk might be far more. So even in our competitions, we just see guys risking 2-3, and ladies as well, risking 2-3-4% per equity, whereas a lot of people might only risk 0.5% or 1%. So obviously very, very different styles of trading as well. You've got the aggressive ones and the not so aggressive ones, but then I suppose with obviously your risk management, do you then have a journal? Do you look at your metrics often? I'm sure we can even look through your dashboard now shortly, and you can take us through some of your trades and stuff, but would you look at your trading journal? Do you have a trading journal? Do you utilize that?
The trading journal, you gave you recommended to me the trading journal, yes, and I use still the one that you recommended when I was your student. And I still use it. And, you know, I go through it, write down my trades and also my rules and my objectives. Like I was saying, if I lose 2%, I'm out. Okay. Or if I'm using a certain strategy, if it doesn't work, then I leave it and go to the other aspects.
Interesting. Yeah, I just find all this interesting. So I suppose then, do you want to take us through? If I allow you to share screen, I think you should be able to, but we can allow you to share your screen. Okay, you should be able to share your screen. You can maybe take us through the dashboard and maybe look at some of the trades, the assets that you trade, and I suppose look at some of the opportunities, if that would be okay.
Okay. Can you see it?
Not yet, no.
Oh, sorry. Okay, so I've got share screen here, right?
Lovely. Yeah, it's sharing now.
Okay.
That's amazing, Simon. That's amazing. Brilliant.
Okay. So yeah, so I use as well. Mostly I use TradingView.
Okay.
So where is it? Let me just look. Okay. So it's getting a little bit.
There's one. I can see one gold pair open.
So the dashboard at the moment, because this is my account, which has just been paid out. So
okay.
so the whole thing has just gone down now because it has just been paid out.
Amazing.
And all that. But because I don't normally go through the dashboard because I look at the but when I do my analysis, I think I can just show you because I'm not very familiar with my dashboard here.
Yeah, no problem.
Yeah, I don't normally use the dashboard on managing my trades, but when I'm looking at the trades, like I use TradingView mostly for the analysis. So like I was saying, once I look at the currents, this is the thing which I was talking about.
Okay.
Yeah, this is the scorecard I was talking about. So it just tells me which ones which currencies, if I'm trading currencies, which currencies are stronger. Like these ones are kind of like very strong, the bullish ones, the Polish, Swiss franc, euro. I never trade the Polish though. So like this, and these are on the bearish camp. Okay. The ones that have got minus here are the ones that I'm looking forward to shorting. So in the macro, it means there's going to be risk in the market shortly. Maybe in the within 20 days, there's going to be some risk in the market here because the Aussie dollar has got a minus here. It got minus today. It was not in the minus camp. It increased minus. It's increasing in the minus. So what it means is that, and the Canadian dollar. So I'm looking to short either of these two, either Aussie dollar and Canadian dollar right now. So what I will do, I'll go to the charts, and I'll show you in a minute. I'll go to the chart, and also to confirm that, I can look at the global indices. So the global indices as well.
Okay, brilliant.
They have got, if you look, the Nasdaq is almost on -3, which means it's a short. Okay. And the SPX is -2, which means it's more like on the short side. I just look on the short side, selling side. Yeah. Okay. So when I have done that, this is the macro. It's more like it tells you the internals of the market. So once I have done that, I will go to the charts, and I use the TradingView for my analysis mostly. Okay. And this TradingView has got, because I subscribe to TradingView, yeah, I can put some of the analysis, like the rising wedge. I didn't draw this up. It's just like you look for them on the TradingView. They actually come up. Yeah. All these indicators and the order blocks and stuff like that. So you can see here, when the market is going down to the order block, I'll be just waiting for it to get into this order block here. Okay. And because of my bias, which I get from the macro, then I will be looking forward either to buy or to sell it. like in this case, because I use as well quite a range of things, then I would look at the confluence of things. Like I use a bit of Elliott wave analysis as well, and and a bit of things. So I can like look when I have got a lot of things coming together. Then like right here is telling me there's a head and shoulder pattern that is coming up on a very small time frame for gold. So if it breaks here, I'll be waiting for that sort of thing. If it breaks there, then I take the trade.
Wow. Okay. Brilliant. Yeah, I suppose the good thing is with your history in academia, you're able to quickly digest the different styles of trading. So obviously the Elliott wave, going through the intangibilities and the nuances with that, the scorecard, as you alluded to, the fundamentals, the macros, and obviously the price action, the different patterns, and obviously the order blocks as well. So the more confidences you have, the stronger your analysis, and that's ultimately the goal really with trading, isn't it? Because you want your analysis to be as strong as possible, you know. That's really, really brilliant. So I suppose one last question, Simon, from me. If you were to say, well, when even let's say from a beginning perspective, what would you recommend any trader to do when they are beginning? At the beginning, what would you recommend them to focus on?
For traders that are really new in the market, I would say they must get themselves aligned with, I think, the prop firm.
Okay.
That's the most important thing for the traders who are starting. And then they should be looking at risk management as one of the things that they have. Risk management, I would say, is the top. I think you ask one of the questions, they will say the rule number one is don't lose money. Rule number two is just the same as number one, which means don't lose money. So I think it's really true. The thing I would say, risk management is the top goal of any trader. And yeah, the other thing is that don't jump in. Like if the market is kind of going, don't jump in, just remain with your strategy. And also again, write down your rules, follow them in your trading journal. Like this I got from you pretty much. So make sure you follow your plan. Do not overtrade. You know, sometimes I do it, but as time goes on, you kind of like, you know, learn that overtrading, or when you sit down and look back, whenever you overtrade, that's when you kind of like start breaking the rules. And also when you over risk, that's when again things go out of play. So risk management, don't jump in, do not over risk.
Brilliant. Okay, fantastic. Brilliant.